What's up, guys, and welcome to the channel. My name is Nick, and in this video I'm going to be showing you guys what to do when the stock market is down, what I did in the last crash of March 2020, and how to determine if your stocks are worth keeping. But guys, before we get into that, as always, I'm going to be transparent with you, show me my portfolio. And actually, if you look on the 1 week, I have a gain of $241.92. I think this is the first gain since I've started these weekly portfolio updates. And as you guys can see, I'm still stuck in the $43,000 range. It just does not seem to be going anywhere. And before we go to the activity feed, I've actually got $30 in cash. So if we click that auto invest, let's see what it would buy. And it looks like it's going to buy American Waterworks, which I talked about that in my top 5 recession-proof stocks. Definitely a great one to pick up. And we've also got Clorox and Walmart, which are both great pickups. So I'm going to go ahead and turn that off. And then let's see my activity feed. And let's start, as always, every Monday, I invest $125. And I'm pretty sure I went over these dividends with you guys, Stag and FRT. So let's go to January 18th, my 6 buys. I bought a little bit of Newsy, Home Depot, Q Yield, Johnson & Johnson. Wow, only $1.81. That's nothing. American Waterworks and Jeppy. So guys, if we move on, looks like another Monday passed. I put in $125 and I only had 2 buys, which was Q Yield at $111 and Jeppy at $13.57. And then it excluded Newsy. So, and the reason it put so much money into Q Yield was because of how much the stock market has gone down in these past few weeks. And it's been crazy. And then right here, I'm not really sure. It says dividend deduction, and then it looks like it gave me my dividend back for FRT. But as you guys can see, I already received that dividend on January 18th. So I think this is just some kind of flaw in M1 Finance's system. So I still received the $12.13 like a week and a half ago. But guys, right here, Newsy with the $12.49 dividend, that is amazing. And I'm going to show you my dividend chart real quick, but we can actually look at my portfolio. So once again, the 1 week, but if we hit the 1 day, I actually finished Friday with $788, almost $789. Plus I earned $10.89 in dividends that'll be paid out later. And looks like real estate did really well. My income pie, Pfizer, AbbVie, Duke, wow, Verizon. So I guess this is my gain based off of dollars instead of actual gains. So here we go. 9% on MasterCard, almost 7 on Apple. Verizon actually did surprisingly well. And if we go to the bottom, so I had 1 stock in the red, which was 3M. So I got to look into that, why they're down. But next, let's go into my charts. As you guys see, my monthly dividend chart, slowly and steadily growing those dividends. And then if we go down here to January 2021, I'm at $174.11. And guys, I'm going to break 200 because I've still got, let's just go here real quick, add that, and then I should be getting $21.75 from Good and $7.68 from LTC. So I should end the month at 203.54. And we'll know for sure. I should be releasing a video either Tuesday or Thursday with my monthly income for January. So that's exciting, guys. In May 2021, I broke 100. And looks like January 2022, just not that many months later, I'm gonna break 200 for the first time. And all right, guys, so let's get into what to do when the stock market is down. So I'm going to go over to Seeking Alpha. And as you guys can see, the S&P 500 is down 7%. Before the huge rally we had on Friday, it was down 9%, somewhere in the 9% range. The Dow Jones is down 4.44%. Then the NASDAQ Composite is down 11.98%, almost 12%. And what a correction is when the stock market drops between 10 to 20%, which the S&P 500 was getting close to that before Friday. And then a bear market is when the stock market drops by 20% or more. So depending on how volatile the stock market is, we could see us getting into a correction in the next couple weeks or maybe next week, or we could get right out of it if there's more good news. So guys, first thing what you want to do when the stock market is down or before a recession, during a recession, before a recession, is you actually want to build up a 3-month emergency fund, which is you just take your average monthly expenses, multiply them by 3, and then add an extra $1,000 just for security buffer. And really, if you really want to be safe, you should save up 6 months of expenses plus $1,000. I actually have 6 months worth of my expenses saved up, and I have that extra $1,000. And honestly, I just got my tires fixed, or I just had got all new tires a couple weeks ago. It was $825. They were getting pretty close to being bald. But so that's fixed. That's part of the reason why we want the emergency fund. Another reason why you want an emergency fund is because a long time ago, a couple years ago, I had a buddy who said that they owned Microsoft stock and that it performed very well for them, but they had to sell that stock because of a family emergency. And I think this was in 2019. So as soon as I heard about that, I realized that I needed to start building an emergency fund because I had no money saved up. I was just throwing every single dollar I had into the stock market. And I realized that I don't know when the stock market can go down. I don't know when a recession could happen, or if I could lose my job, or my battery in my car goes out. That happened in 2020 and it was like $500. So just I know saving money is boring, but it's actually one of the most important things you can do when you invest. That way you don't have to sell your stocks to cover any emergency expenses. So that's the first thing I would do when the stock market is down. And then the next thing, guys, is just you need to evaluate your stocks and figure out what stocks are good, what stocks are going to be reliable, and which stocks like suck. And so I'm actually going to show you what I did in March of 2020. And actually, I think it's more April. But so if we go to my buys and sells, and so this is the one thing I hate. At the beginning of 2020, I was saving up for my emergency fund, so I did not invest that much money into the stock market. But I really should have, when it crashed, put all my money in March. But if we go over here to April 6th, I have, as you can see, I have 12 buys and 7 sells. So what I did here is I actually sold all of the stocks in the industries that were cyclical or industries that I just didn't believe in anymore because of what the pandemic showed. For example, during the pandemic, financial stocks like PNC and Wells Fargo got hit hard. Energy stocks like Valero and XOM, other energy gas companies got hit hard. Disney completely cut their dividend, so I sold them. And I also didn't want to be in entertainment stocks like Disney, Carnival, Vegas stocks, anything that could be affected by a lockdown. Once again, I sold Toyota, my automobile stocks, because I see car sales as more cyclical. They're not reliable, they're not consistent. So I wanted to get out of that. NRZ, they were a mortgage REIT and they reduced their dividend by 50%. And then I sold Logitech because even though they have amazing quality in their equipment, I just didn't feel like it was an essential industry to own. And even looking at some of these stocks I bought, I actually ended up selling Welltower because they did not perform well enough for me and I just didn't believe in the business. And another thing, I also sold Store Capital because I didn't like that business either. And let me see if I can find it. Not exactly sure where it is, but Stag was one of the REITs that I picked up after, because as soon as March of 2020 hit, oh, maybe it's here. I just sold out. I say I sold out of all my bonds and I just bought a lot of new REITs like Stag, Good. I got those triple net lease REITs that were into distribution centers like Stag, stuff that I believe would last for decades. And so guys, now the last thing I'm going to show you when it comes to what to do in a down market is I want you guys to go through your stocks and evaluate them and see how committed you are to these stocks, because that's what I did in March of 2020. I noticed that I think I had 45, 46 companies or more, and there were a lot of them that I just did not have high conviction in. I just didn't believe in the business that much, and so I started cutting them. So, for example, McDonald's was a stock that I sold much later during the pandemic, but I just realized that, I only go to McDonald's if it's like last minute desperation, like I'm traveling on a road trip or going far away to where there's like nothing else. It's mostly convenience. So I got rid of McDonald's. I mean, they also had declining revenues. So guys, I'm just going to go through my stocks real quick. As you can see, I'm in the holdings section, the unrealized gains. And when you're in M1 Finance, normally they have the money weighted return, but here on holdings, they show the actual return of owning that stock. And so as I'm just going to do this real quick and just tell you, rank my stocks by my highest conviction to my lowest conviction. So Apple is a highest conviction stock. For me, that's ride or die. FRT, let's say it's a high conviction. Microsoft, highest conviction. Pfizer, highest conviction. AbbVie, high conviction. Costco, highest conviction. ADP, highest conviction. Home Depot, high conviction. Stag, high conviction. BXMT, above average conviction. This is a stock that I thought would be really risky, but they've actually never cut their dividend on me and they've performed very well. Next one, Good. Another stock that I thought would be risky but has performed really well for me, I give them a high conviction. Pepsi is highest conviction. Procter and Gamble, highest conviction. Southern Company, highest conviction. Now Mo here is a medium conviction. So I actually took Mo from 4% of my portfolio's allocation down to 2 because they have a really high dividend. I'm not sure how long that's going to last. So I only have them at 2% of my portfolio because if I did need to sell them and put my money into something else, I wouldn't be selling a large chunk of my portfolio. So while they're giving out the dividend, a great dividend, I have them at medium conviction. So I'm still going to hold on to them. And as you guys can see, they have performed pretty well. Next is Johnson & Johnson, which is highest conviction. Duke Energy, highest conviction. General Mills, another food stock, high conviction. MasterCard is highest conviction. Texas Instruments, highest conviction. Now, IBM is medium conviction, but if they keep working on their cloud business and keep increasing their revenue, like they just did in their recent earnings report, I could put them at an above average conviction. And IBM is actually another stock that I'm iffy on that I have at 2%. O Realty is highest conviction. Colgate, highest conviction. You got to brush your teeth. So that's a no-brainer in my portfolio. Merck, I'd say above average conviction. We'll see how they do in the upcoming years. That's not Google. Walmart is highest conviction. Kellogg's highest conviction or high conviction. American Waterworks, highest conviction. Hormel, high conviction. Jeppy, high conviction. LTC is medium conviction. As I've said in a previous video, as long as they keep paying me a dividend, I'll keep them, even though their performance is not that great. Clorox is highest conviction. 3M, I'd say above average conviction. They're another stock where I think they're kind of iffy. I'm not sure how they'll do in the long term, but as long as they keep up the good dividend, I'll keep them, and I'll see how that goes. Q yield, I'd say is high conviction. Nusi, high conviction. Verizon is medium conviction. As you can see, they're my worst performing stock, but they do have a good dividend yield. And I actually use Verizon for my phone service, and I do like my phone service. So for now, I'm going to keep Verizon. And so guys, this is just a quick exercise that I'd recommend you guys doing to just just go through your portfolio. I do have a lot of positions at 35, but as you can see, the majority of them are highest conviction or high conviction. And that is how I've set up my stock portfolio to where if the stock market was to tank 20%, I honestly would not care because I have a strong conviction in the majority of my stocks. And of course, if my stocks were to cut their dividend or reduce it, then I would sell it. Or at least I would consider that. So guys, that's the video today. Thank you for watching. Don't forget to like the video.